start off by introducing myself. My name is Elmer Goosen, and I am the owner of Clinic with Purpose. And with me on the panel today, I have Megan Dedicant. She's from Business Partners Limited. I have Alistair Gordon from Smart Business Solutions. I have Melody Kaba from My Future Work. And then I've got Willem Haroff from Dough Getters Accounting. So as you can see, we are joined by people who really understand how small businesses need to get funded, and also will be able to give us some really, really great tips. So before we start off, actually, I'm just gonna go to our panelists and ask each of you to just introduce yourself and just give a little bit of background on, why you are so passionate about helping small businesses find funding. So we're going to start with Megan.
Thank you, Elmarie. And morning to everybody online. So my name is Megan Dedicant. I'm the area manager for our Pretoria branch here at Business Partners. And my team, I head up a team of investment officers focused specifically on business investments and in commercial, industrial, retail, property investments. I've been at Business Partners now for 13 years, and our focus has always been twofold. It's ultimately growing small business and entrepreneurship in South Africa, and we achieve that through various funding options that we do have available for clients, and then on the flip side, development and support initiatives and structures that we have in place for our SMEs. Incredibly passionate about growing small business entrepreneurship, and really getting involved, seeing how we can assist our entrepreneurs, understanding the problems that they sit with, understanding that I think entrepreneurship is a lonely game, and it's always good to have people that you surround yourself with, that you can soundboard off with, and obviously trying to help and grow our entrepreneurs. That's me in a very short nutshell. Thank you, Elmarie.
Thank you very much, Megan. Alistair, over to you.
Yes, thank you for that, Elmarie, and welcome to everybody that's on the session today. My name is Alistair Gordon. I'm the owner of Smart Business Solutions. I am a business coach and a business development and digital transformation strategist. I work with business owners, entrepreneurs, and SMEs to help them understand the process of starting, managing, growing, and scaling what we call a valuable business. And it's that last word which is really, really important, is understanding as a business owner of what value creation entails in your business. As investors are often trained to understand exactly how to invest in businesses, but as business owners, we aren't, and we need to learn and develop those skill sets. I'm very passionate about working with business owners and helping them understand these elements when we do our engagement process. It's not just one of advising, but we actually work very closely with business owners as a trusted advisor and coach, implementing a lot of what we do. So really looking forward to this conversation today. Thank you.
Thank you, Alistair. And then Melody, you are actually an entrepreneur yourself, so you will have some really great tips. I know that when we discussed it earlier, but just tell us a little bit about your journey as well.
Okay. Hi, everyone. Thank you so much for that. So my name is Melody Kaba. I run a company called My Future Work. We are an e-learning business, and I am here really to share from a perspective of an entrepreneur and someone who's had to navigate different ways to fund my business. And that's where I'll be sharing from today.
Thank you very much, Melody. And then lastly, over to you, Willem.
Yeah, thank you very much, and good morning, everyone. Thank you for the time that you've taken out to spend some time with us. I'm a business owner and entrepreneur first, and secondly, I'm a passionate accountant. I have loved accounting since the year dot. I've been doing accounting for the last 28 years. The last 7 years, I've run my own practice called Dough Getters Accounting, and we are passionate about helping business owners stay on top of their numbers, because as a business owner myself, I know just how difficult it is to not only run your business, but to always have enough cash flow available to make sure you keep the lights on. It's tough out there, and I'm looking forward to share some of my insights as well with all of us today. Thank you.
Thank you very much. All right, so let's start then. And I mean, as we are talking specifically about funding, let's start with the most important question that, you know, I get from my network of small businesses all the time. And, you know, it is, what are the different funding options available out there? And Megan, I think I'm going to come to you first.
Thank you, Elmarie. You know, it's not always the easiest question. You know, I think probably the most commonly cited problem from entrepreneurs and SMEs has always been, number one, access to finance, and number two, access to support services. So when I come here and I say to people, but there is actually so much funding available, I think it has a tendency to annoy people. But I think what we need to really understand as business owners is, where is our business in its cycle? And what is the type of funding that is actually going to fit my business and my actual funding need? You know, so are we looking to expand? Are we looking to bridge the gap? Are we looking to buy certain assets? Where are we in our business, and what is our actual funding need? And when we are able to define that, I think it becomes a lot easier being able to, how can I say, go out there and navigate the funding landscape and actually understand what funder will suit you best. So obviously, I think when we say funding, the first thing that comes to mind is banks. I think everybody understands where the banks fit and who the banks are. But I think what has a tendency to be forgotten is that banks, more than anything else, I do believe, are custodians of our money, and they are there to provide transactional facilities that allow you to conduct your business processes. So that is why we do have, obviously, our transactional banking facilities, our bank accounts, our overdrafts, credit cards, and those type of things that are quite readily available at the banks. But as soon as you come to them with the transaction that poses potentially a little bit more risk for them, then suddenly the doors close, you know, and then we don't always understand or know where to go. And that's why I say we need to understand our businesses. So other than the banks, we're looking at, again, if it's an early stage business, obviously our own funding or our own capital that we can put in, but then beyond that, we start looking towards private investors. So then we start looking at shareholders coming in, family and friends maybe, who are able to extend soft loans, maybe the company, meaning that they come with very, how can I say, soft repayment terms. Beyond that, once you actually get your business going and operational, that's when you can start looking at alternative funders, like business partners, for instance, where there is an appetite for risk. We understand the business, we understand the transaction on hand, and as long as the viability is there, we would look to extend the funding and are willing to take certain risks. Beyond us, there's obviously private equity, venture capitalists. But again, here comes into play, you need to understand the requirements of these investors. How hands-on or hands-in your business are they going to be? What are their reporting requirements? A lot of them are looking at job creation, skills development. They're looking at your ESG, so your impact of your business. So a lot of that comes into play as well when selecting certain investors. Yeah, so again, you need to understand the criteria of the investor or the funder that you're looking at and what they require from you, what the cost of their money is, also when selecting an actual funder. But yeah, that's just to give an idea. So it can really range from private equity, venture capital, banks, alternative financiers like a business partners. We get a lot of cash flow funders these days, like your Lulaland, your Bridgement, your retail capital, those people who are essentially bridging the gap. All the way to alternatives like crowdfunding, creditors. There are various forms of funders available out there. You just need to be able to match your need to their criteria.
And I think that, you know, it's really important is, you know, when you do a Google search on SMME funders, you know, there's a whole list of businesses that, you know, organizations that come up these days. But I'd like to go over to the rest of our panel and just ask them, maybe do they have any other, input or any ideas? So Willem, I'm going to go to you because I saw you nodding vigorously.
Yes, thanks for that. Yeah, and I must say that was a very good summary of the options that are available. And the point I wanted to emphasize is the matching of where you're at as a business with what kind of funder you want to deal with. That's critically important. And that's why I believe, because of that, may I say, ignorance on the part of a business owner, potentially, they go knock on a door, but it's completely the wrong door. And then they become, disillusioned and saying, well, there's no money available. So I think that's an excellent point that was made. Perhaps an example of where just yesterday I had a meeting with a client and we were discussing bridging finance, which was one of the options that were mentioned. And I actually recommended that they go with Bridgement. I heard that company was not, because they specialize in bridge finance and it works exceptionally well. And they also have a much higher risk appetite. But then I spoke to the client and he said, well, I want to buy a machine. And I said, well, how long are you going to use the machine for? He says, well, 5 years. And I immediately said to him, well, that's not a good idea to use bridging finance for that kind of asset purchase, because the asset's going to serve you for a multiple number of years. But the finance is priced in such a way that it's a lot more expensive because you're going to pay it off over 6 months, for example. So that was a good example, top of mind for me at least, of how important it is to match the need with the type of finance.
That's a great example, actually, Willem, we kind of, and I think that's one of the challenges that small business owners have, is they don't necessarily understand the difference in the type of funding that is available. Alistair, I want to pop over to you. Do you have any additional comments you'd like to add?
Yeah, I think to echo what Megan and Willem was saying, I think, and I agree wholeheartedly with what they shared. I think one of the things that really comes to me for the fore is, as business owners, we need to understand the need to develop what I call an entrepreneurial skill set. That is very different to the skill that you've developed or you've been trained on, or whatever it was at varsity for the degree you got, or whatever you are gifted at doing. That is the skill set to be able to start, manage, grow, and scale a business. And often that means learning new things. It's understanding, as Willem shared, the different stages of where your business is at, and the funding that matches it, and all of these different things. And that applies across all the different disciplines. So even with regards to funding, go and do your homework, educate yourself before you just jump out and start looking for funding, because often it's a lack of skill set that results in this mismatch over and above not identifying the right funder for what you need. So educate yourself, as funders do when it comes to investing in small businesses and all of that. Teach yourself those things as well. Start thinking as an investor. What is it an investor knows? Let me learn that so that I'm better skilled when I engage with them.
Thank you, Raj. Megan, I want to come back to you just for a second. So we were talking about all the different funding options that's available, and then Willem gave that really great example, of small business asking for the wrong type of funding. Do you have any tips or advice for a small business on how they can figure out what is the type of funding that they need for their business? Depending on what it is that they want to do. I mean, you think about PO loans, the bridging capital, startup loans, all those kind of things.
Definitely. Again, at the end of the day, I think more so than anything else, they need to understand why they need the money, So again, exactly like Willem's example, I mean, if you want to purchase an asset, you're not going to go to a cash flow funder to purchase an asset, or you shouldn't, because a cash flow funder, for instance, it's normally a short-term facility, 6 to 12 months. They're charging you a monthly interest rate of anything between 2 and 5%. I mean, so you could be paying up to 60% per annum for that asset, and it just makes the whole cash flow not work, So I think more so than anything else, you need to understand why you need the funding, So if you need to bridge your gap, so say now, for instance, you have a cash flow shortfall. So you need to purchase stock now, you need to pay for it, it then comes overseas, it takes a month to get to you, then you sell it to your client, but your client only pays 30, 60 days. So then you're sitting with a cash flow cycle that's been 90 days long until you get your money back. That bridge, that makes sense to bridge it with the cash flow funder, you know, because then you can settle it very quickly. But in terms of assets, then you're obviously looking for something a little bit longer. So I think more so than anything else, when selecting your funder, you need to understand, number one, what it is that you're funding. And then number two is understanding that financier and the type of deal structure that they would actually issue you. Is it a short-term loan? Is it a long-term facility? Is it interest-bearing? Are there fees involved? Are they taking profit share? Is it a share-based transaction? So you need to understand exactly what that funder's cost is going to be, what they're going to require from you, and yeah, ultimately what it is that you're funding. And then that will hopefully should guide you in terms of where you should start looking.
Thanks. Willem, I just quickly want to pop over to you, because I know, you know, from your kind of business, we talked about the importance of small businesses to understand the numbers. You know, and I think what Megan just raised here is to really understand the impact that taking that funding is actually going to have on your business. Do you have a few hints and tips maybe there for a small business to what they can look out for?
Yeah, absolutely. I think philosophically, I want to start with the idea that you need to have a proper set of accounting records in place. If it's not in place, then whatever I'm going to say from here onwards will be academic. So the idea of making sure you've got your stuff in place, you've got a good system, good processes, and then of course a trusted accountant cannot be overemphasized. And that is something that people typically look at as a grudge purchase in their business, and therefore classify as an overhead. They should invest in that. If you've got that stuff in place, then you can start to talk about getting the type of insights into your numbers that you need that will help you make the right decisions. And the insights that drives decision making is turnover. How much profit do you generate, and how quickly and efficiently can you convert that profit into cash flow? The next thing would be to use that information to start to produce cash flow forecasts. It's with cash flow forecasts that you go to a potential funder, together with the viability, as Megan mentioned earlier. You know, the viability talks to the turnover, profit, and cash flow generation, but the cash flow forecast is the tool that you demonstrate how that's going to play out in the near future. And of course, that's never an exact science. You make assumptions, but part of the viability assessment is to test those assumptions. And once you've got that, then that makes the journey of getting to the funding a lot easier. I always say to my colleagues and my clients that the only sexy business is one that can generate positive cash flow, and no better way to demonstrate that than with those tools that I've just mentioned.
Thank you very much, Willem. And actually, Melody, that now brings me to you, because I'm going to start, you know, with the question to you, and specifically based on the experience that you've had. So, you know, startup businesses often say that they need funding to get off the ground and operational. And yet many of them struggle to get access to this funding. I'd like you to just share some of the experiences that you've had and the lessons that you've learned as you started going for funding. And, you know, just share how you navigated that, and also some of the alternative solutions you came up with.
Okay, thank you for that question. So when it comes to, you know, starting a business, and when it comes to money, not just funding, I think the perspective that we went with when we were starting our business, and we went straight for, how does this business generate revenue? Right, so that became the priority, the most important thing for us. We had grand, big ideas that needed lots of money, and we realized very soon that we were not unique in having grand, big ideas that need lots of money, and that not everybody with grand, big ideas get the money. So then, you know, getting funding then becomes a thing of, it becomes difficult. So then you have to start scaling it down, right? And going, what do I need as a business, right? So what do I need the money for? Do I need to fund this particular operation? Okay, so technically what this operation needs is this specific resource. What is a way of me accessing this resource without me accessing and necessarily going to get funding. That's how we started to get our business going, and we focused more on revenue. Our experience, with funding, the first time we went to apply for funding, at the time, because we still qualified with the NYDA, we showed up at the office there with my business partner. We asked the lady, how do we're here to apply for funding? She was lovely. She was very friendly and helpful. She showed us this very big list that we need of documents that need to compile for that funding. And we looked at the list. We thought, we do have most of the stuff, but it will probably take us some time, like probably a week or so, to compile, all of these documents that are required. And then we went on to ask her, so what is the most that we'll get out of this? And then she said, you'll get great money, 12,000 Rand. And we just thought, oh my goodness, we're going to go through all of this for 12,000 Rand. It's just not worth it for us, at this point in time. And those were part of the things that were encouraging us, to go for revenue. We also joined an incubator with a big tech company. And one of the experiences that we had, this was early on in our business, was we met a lot of entrepreneurs that were 4 years, 6 years into their journey. We were just a few months, right, into our business. And we learned that a lot of them were living on funding, like grants and stuff. We made a decision then that we didn't want to do that. It's one of the things that encourage us to pursue revenue. Pursuing revenue is hard, right? Because it means that now you have to wake up really every day and work and make the most of your 24 hours a day. It's less sleep. But at the end of the day, it is the best way to fund your business. Once you get cash flow, like what Willem was saying, once you start to get cash flow going into your business, once you start to get revenue going into your business, you are able to then to look at all the other big dreams and things that you want to fund. You might not even necessarily need to go and apply for funding. One of the other ways as well is looking at your friends and family members. When we were out, we needed a couple of things. There's a couple of things that we needed, and we didn't necessarily have the money. And as much as we didn't want to fill in the paperwork to get the 12,000 Rands, we still needed the money. So going as well and using your network. The saying, your network is your net worth. It's not talking about only just like your millions of dollars of net worth, even like the smallest, right? You can, I made an example of how you can go to your mother's stokvel. Stokvels, some of these stokvels have about millions and millions and millions. Tapping into funding like that and saying, hey, you've got this money, I've got this business. Would you guys like to be, investors in my business? There's just lots of different ways in which you can get your business funded before you meet the red tape. I think that one of the challenges with the other funding institutions like your banks and like the IDC is that they fund businesses that are at a certain stage, right? So you have to be, I don't know, X amount of years into business, X amount of revenue that you are making as a business, profitable, all kinds of bells and whistles. Basically, you need to look like a business that doesn't need funding before they can give you the funding. And that can cause, a lot of red tape. I think that that's one of the areas in which, when it comes to funding in South Africa, where the struggle is getting seed funding. I don't think it's that difficult to get seed funding. Getting a medium to large enterprise funded is not a problem. It's that small business that is trying to scale. That's where you find that there's a big challenge. And I feel that that's where the funding issues need to be addressed in South Africa.
Melody, I think you're making a great point that there's actually, there's the formal funding process and formal funders. And then, there's the informal investors that you can go and find. Megan, I want to ask you, what's your views on that? If we go down that route for, the more informal kind of asking people to invest in our business, what are the kind of things that we should bear in mind?
And there are definitely pros and cons to, how can I say, informal invest in your business. So if it's family and friends or however it would be, as I mentioned earlier, probably pros of that type of funder is that they would probably give you funds. If it's a loan, it might be interest free. There'll be no repayment on it. There'll be no terms attached to or it will be relatively cheap. You know, I think it's very rare that they would actually want to come in and take a stake in your business. So it's normally very soft money that comes into your business. So that's obviously the pro. It helps you with your cash flow initially, and it really does help to get the business going. The con with something like that, there's a few. Number one, say now something happens in that person's life and they need that money back immediately. You know, they call up their facility and I want my money back now. You need to make a plan very quickly. Yeah, no, now you have to go and source alternative funding and replace that funding and potentially replace that funding with very expensive debt suddenly. So that's one item. Flip side, your business starts performing exceptionally well. And now this person's involved in your business and you can't get rid of them necessarily. Then they want more of the pie and they want to get more and more and more involved, you know. So it's really a tricky thing, taking money from a more informal type investor. And if anything, my advice there is that whatever you do, make sure that it is properly contractually done. So that we have a proper document in place showing or highlighting the repayment terms, that the funds can't be pulled up or called up too quickly. If there's an exit, that there's a proper exit strategy, that you understand how the exit is going to be done and how the funds are going to be repaid. Otherwise, I think you could be giving yourself a bigger headache than what you actually realize.
Absolutely. I think, you know, there is that saying, don't do business with family and friends, but when you do, make sure that there's a contract in place. You know, so that there is, you know, that there is something in writing. Willem, I want to ask, do you have anything to add?
Yeah, I wanted to pick up on one of Melody's points in terms of being funder ready, and she mentioned the long list of requirements. And maybe it's also a question back to Megan in terms of the perception of you know, a potential investor when they look at small businesses. You know, what gives you confidence that it's a good business to invest in? And I think, from my perspective, one of the things that I think raises the confidence levels, and perhaps if you wanted to sell shares adds premium to what you can sell for, is your ability to, in a very short space of time, put the information together and give it, or even have it ready in season, out of season, because it shows something about the entrepreneur. It shows something about the owner of that business, that they are indeed a good steward of their money. They're disciplined. And those are all things, I think, you know, soft issues that adds to any application for funding. So yeah, I don't know, I'm not sure, Megan, if that resonates with you guys, but that's certainly something I always advise my clients. Always be ready. Don't wait for the day when you need finance to get ready. Always be ready in season, out of season.
Yeah, just to respond, Willem, I couldn't agree more with you. I think that's probably one of the biggest, what can I say, problems that we sit with as a funder, is that the guys just aren't ready. Yeah, no. So I couldn't emphasize more. Have your financials up to date. Keep management statements. Make sure whatever contracts or whatever documents you have that need to be in place are in place. Make sure you understand your business plan and that it does actually get updated. You know, at the end of the day, a business plan is also, it's a dynamic document. It's not something that we write and that's how it's going to be forever. You need to update it. You need to update your cash flows, your projections. For us as a funder, so much emphasis is actually placed on your projections. You know, so you need to make sure that they are as accurate as possible. You need to understand your profit margins and obviously all of the ratios in your business. You need to understand your solvency levels. You know, so there's actually a lot that an entrepreneur unfortunately does need to understand and keep up to date. But I think that's also something that I mentioned in one of my opening statements, is that it's so important for an entrepreneur to have access to support services. You know, so if it is someone like a Willem on the accounting side, or Alistair on the business development and digital intervention side, you need somebody who's almost always keeping you on your toes, you know, keeping you up to date in terms of what needs to be done in your business, and also somebody for you to soundboard off of, and somebody to brainstorm with. You know, again, as the entrepreneurship is more unfortunately a lonely road, you know, and you need to surround yourself with the right support, I believe, to ultimately be successful and to ultimately be able to grow and scale that business.
Melody, you have something to add. Thanks very much, Megan.
Yes. Just, adding on the point that Megan has made, and again, going back to the list, right? One of the things that we found helpful, and we didn't, know this when we were starting, and Alistair mentioned this as well. I was coming from, corporate. I'd never, run a business before. I had no idea that I needed a different skill set to be able to run a business, because when you're corporate, you do the work that you do. You're not concerned with what finance does. You don't know what HR does. You don't know what that other department does to support the work that you do. And part of the skill set that you need very quickly as an entrepreneur is that accounting system, right? Almost immediately. It's knowing, your HR system almost immediately, and all of these other support things. And the sooner you digitize those functions in your business, it helps you to be able to keep track. And that's how you start to build documentation without even knowing that you're building all the necessary documentation that you need as a small business, because it can get overwhelming, like, all the stuff that they need. But as soon as you digitize all of these different functions, the support functions for your business, you are collecting that documentation. And when the time comes for you to be able to apply for funding and they require that documentation, all you're doing is download. So I want to say that digitizing your business as soon as possible is actually a very crucial step when it comes to getting your business funded. And then, to Alistair's point, getting those skills and learning those skills as quickly as possible when you're starting a business is a very crucial step to getting your business funded.
Thanks, Melody. Great point. Alistair, you've got something to add.
Yeah, I think, thanks for that, Melody. I can't overemphasize the importance of that. And I think for yourselves sitting here listening to this, don't think we have it all together. I remember when I started my own entrepreneurial journey after 20 years in the corporate space, going out thinking, because I'd been corporate skilled, trained there and everything, I knew how to run a business. I learned very, very quickly that I didn't. And I had my failures along the way. So don't look at failures as a negative thing. Look at it as a learning experience. Very, very important. But I think, if anything, what I want to encourage you to do is develop a lifestyle of learning. Educate yourself, train yourself, develop those skills which are needed. You are trained to do whatever it is you do, but nobody gets trained to be an entrepreneur. That is skill you develop along the journey, through much bumps and heartaches and all of that along the way. But you've got to develop your entrepreneurial superpower. I mean, I talk about being an entrepreneurial superhero. You've got to get up, dust yourself off, put your underwear on the outside, and continue and start again, and all of these things. I mean, that's what we're required to do as entrepreneurs, and it is a lonely road. But this is a skill set you need to develop as you go along. And get the right people around you that can guide and direct you, a coach, a good mentor, somebody that can just walk alongside you. Find somebody who's got a business and done well, and ask them questions. Be inquiring. Very, very important at the end of the day. I can't overemphasize that.
Thank you very much, Alistair. And actually, the next question is posed to you, because we often talk about businesses being fundable and then being funding ready. What is the difference, and how would a business owner know kind of where they sit? Where are their business in that process?
I think that's something very, very important. And I remember when I met with Megan the very first time, we spoke about that, because I was busy helping SMEs apply for funding, and we were looking at business partners at one stage for that. I think what's important, and I want to add a third element to that, and it's understanding whether you've got a good business, a fundable business, or a funding ready business. And I just want to unpack each of those very quickly. And there's a lot to put in there, so this is not comprehensive, but it'll give you a good idea. So you can have a business which you think is funding ready, or fundable, but it's actually not. It's just a good business. Now, a good business you could describe as a business which you've grown, it's predictable, it's profitable, it's repeatable, there's good revenue generated there, but there's no opportunity for scale. So when you go and approach an investor for funding, they're going to be looking at where's the opportunity for scale, where's the opportunity for growth, is there opportunity to derive our return we're seeking, and for us to exit along the way. So sometimes you might, have a good business, which is great, and it can continue and it's profitable, and now you start seeking for funding, and there's that mismatch that Willem and all the other panelists have been talking about. So that is very, very important. It's almost this mystery in a sense that funders are looking for. You've got something which is beyond just predictable and repeatable. There's opportunity to scale, all of those sort of things. And sometimes, you've got a good business, and now you start looking for funding. That also changes your focus in the business. Now suddenly the focus is on trying to raise funding, and maybe there's a misalignment with the funding, and you lose focus on what it is that you're doing to run a good business. So I think that's very important, just as the first step in terms of it. In terms of then looking at a fundable business, there's a big difference between a fundable business and a funding ready business. And we've sort of touched on elements of that already. Some points which you can give thought to just to understand what I mean by a fundable business. So firstly, is there a problem that you are solving? Have you gone and validated that problem in the market? You might have a great idea. You might have started the business. Is there a demand? Is somebody buying your product or service? Is there increasing demand for it? So firstly, what is the problem you're trying to solve, or the need you're trying to fulfill? Is it just perceived? You might have one revenue stream in your business and you're trying to expand into another one, and that's why you're looking for funding. So it's not just about startups. You might be trying to grow the business by introducing a new product or service. So is there demand for that? Is there a real problem, or is it a perceived one? And have you confirmed this by customers taking up your product or service? Remember that a business idea might just be an interesting idea. It might not be something that is a business idea. And there's a big difference between the two. And often we see a lot of SMEs go down this rabbit hole where there's no demand or no need because they haven't gone through the process properly to qualify that as well. Second thing that's important there is the market size and that ability to scale. I touched on it a moment ago. No investor is going to go and invest in your business if there isn't opportunity for growth or scale. Where are you in the market life cycle? Is this a new market? Is it an established market? Is it a dying market? Those are elements that are very, very important to understand, and that needs to be reflected in your business plan as well. So that's vitally important. The third element that you can look at is your team itself. An investor is going to look at who they invest in the jockey, what is the product or service you're trying to sell, and what are the processes that are in place. Three very, very important things that they're going to be looking at. And if you don't understand your business and you are not seen by the investor to have that skill set to lead and grow and scale your business or manage a team of people, or you've got the wrong team of people around with you, that's going to count negatively against you when you try and apply for funding, because they're not just looking at what you present on paper. They're looking at you as an individual. They look at your team. Do you have the skill sets? Do you have all of the right tools in place to actually give them that return ultimately that they're looking at for that investment? Because remember, that's what they are looking at. When they give you funding, they've got a specific return that they're wanting to get. They're managing the risk. That percentage that they might ask for will vary depending on the risk. So you've got to show them how you're going to manage and reduce that risk for them. Very, very important. I've touched on traction already, so that is good. Do you have a unique selling proposition? So what is it that you are taking to the market? And this is where I always challenge SMEs around understanding their business model. If you don't know what a business model is, please go and do research on the business model canvas. It's a framework for understanding the different building blocks of a business, developed by Alec Oosterwolde in 2012. It speaks to 9 different business blocks. with multiple elements in there. And you need to be able, before you even go and sit in front of an investor, be able to articulate and summarize your business on a A4 piece of paper across these 9 business blocks. If you cannot do that, then you don't have a clear understanding of your business itself. So just by a quick summary, the building blocks: imagine your business is a theatre production and you're sitting in the audience watching your business on stage. That which you see on stage is really what you would call front house customer-facing activities that you've got. So there's 5 elements there that you want to really understand: is your customer segments, your value proposition, your relationships with the customers, your channels to market, and the types of revenue streams that you generate. And then if you look at that theatre production, there's a whole lot of things happening backstage that you don't see. It's the same in your business. You've got a whole lot of back office functionality that is happening. So your key activities you're doing on a daily, weekly, monthly basis, your resources you need for that business, the partnerships you need in place, and the cost structure. These are all important elements, and you need to be able to articulate that very, very clearly to a business funder, because if you can't, they're going to see that you do not understand your business properly and what is happening in it. Lastly, around revenue streams, understand different revenue streams. If there's a skill set I can encourage you to develop, is understand different revenue streams that businesses can generate, and the differences between buying and selling a product for a profit, or service revenue, or contractual revenue, or subscription revenue. Each of these have a different weighting and impact of value on the business, and are seen very differently in the eyes of an investor. Something that involves a contract or a subscription revenue is a lot more predictable than buying and selling a product, because that tends to be based on history. Subscription, they're going to tend to continue to subscribe. A contract, you've got a term that helps give predictable revenue for the business, which the funder can rely on. So those are of greater value. Look at, if you've got a service, for example, can you go and productize that service and turn it into a repeatable product at the end of the day as well? Also very, very important. And then lastly, we sort of touched on this briefly, I think Willem touched on it as well, is that importance of understanding that difference between a fundable business and a funding ready business. You could have all of these blocks ticked as a fundable business, but you might not have a funding ready business because there are weaknesses in some of the things that the investor is going to look at. So those are things around legal compliance, your SARS good standing, your business due diligence. And if there's one thing I can encourage you to look at, and I think Melody and Willem and Megan have all touched on this, is put together what I call a due diligence pack. That is what the investor is going to want from you. So put a file together with all the documentation, everything that you want, that you're going to have on hand when you sit in front of them. You take that with your meetings with the investors, and you make sure that you've got that there. So here are some of the things to look at if you are funding ready. Have you got are you building a great business? Very, very important. Is the expansion? Is your financial model clearly defined? Megan spoke of that financial model from an investor point of view. Vitally, vitally important. When an investor looks at it, they're going to look at both the financial model as well as the verbiage in your actual business plan that you're submitting. And the two need to marry up. Don't go and say something in your business plan that doesn't show up in your financial model, or put something in your financial model that's missing in your business plan. All the investor's going to do is come back with questions. You said this, but I don't see that here. And all of a sudden, their confidence in your ability to run the business and execute on an investment is reduced and reduced and reduced, because now there's issues in your application of that. Another thing, vitally, vitally important, understand the value of your business. In an entrepreneur's eyes, we will always overvalue our business, okay? An investor is going to come with valuation models, and they will value their business according to the risk that they see. So you need to think like an investor. Don't go there with an overinflated valuation of your business, and then you don't get what you want. And, well, no, they didn't want to fund me. Meanwhile, you actually overvalued the business. And the funders actually valuing it properly. So make sure your valuation aligns with the funder you're talking to, and you're using the same sort of models to get to a valuation. Nail that due diligence. Very, very important. Willem touched on it so nicely. Make sure you have it with you. Get the information to them as quickly as possible. It shows that you're on top of your game. And make sure you're also asking for the right amount of funding. I mean, this is something Megan and I have often spoken about, is make sure that what you're asking is sufficient for your growth. You know, you don't want to be coming back in 6 months' time, I ran out of funding, or you ask too little funding. So you've got to get that right. And that's where the financial model becomes very, very important. And then two other things which you can look at as well is develop a skill set for understanding putting together a deal with an investor. Go and read about it. Go and learn about it. How do you put a deal together? That's negotiation skills. And then look at your pitch deck as well. Make sure you have a pitch deck. You don't know what sort of investor you're going to come across. Make sure you've got a pitch deck. Summarize that in as little as 10 pages. Go and do research. There's some amazing pitch decks you can find on LinkedIn and all of that as well. So that to me is really just some of the key elements of understanding a good business from a fundable business, from a funding ready business. Very, very important to develop this skill set as a business owner.
Thank you very much, Alistair. We have just over 10 minutes left. And Willem, I'm going to ask you the next question, which is, why is it that funding applications are being turned down? Because what is it that funders actually want to see from us that will give them comfort?
The best knee-jerk response to that would be, I don't know how many of you have watched the James Bond movie Casino Royale, and the villain in the movie at one point made the comment, I believe in a reasonable rate of return. Obviously, his motivations were different to what an investor would be, but I think that's just it. Nobody's going to give money if they won't get it back plus a premium, and that's the confidence that as a business owner one must be able to demonstrate very clearly. The more confidence you can espouse, the easier it will be to get that nailed down. And I like the analysis that Alistair made. Having an awareness whether you're a good business or a fundable business or a funder ready business, I think is key. And that's perhaps also my experience. What happens a lot, people go to the table to ask for funding when they're not ready for it.
Willem, how important is it when we talk about the financial information? What is it when you present your finances to the financial health of your business? What is it that a client or an investor or a lender wants to see?
Well, I think it's confidence in the numbers. As business owners, we all understand what it's like to run the business by gut feel. And I would dare to suggest that in most cases, most great decisions come from the gut feel. But you always have to test the gut with the numbers. And that's really where the reality comes in. That's why I believe Alistair is so right when he said most business owners would overvalue their business because in their mind, this is the best thing since sliced bread. But now how to prove it? So I think it's the ability to tell a good story using your numbers, making that connection between the story and the numbers, and then articulating very clearly, why that should be attractive for an investor. And for me, the attractiveness of a business is a top line that continues to grow, a healthy profit margin, and most important, that profit must be translated into well-deserved cash flow. That ultimately is what makes the world go around. Unfortunately, or fortunately, depending how you look at it, but it's that ability to demonstrate the confidence in the numbers.
Thanks, Willem. Megan, do you have anything to add to that?
Thank you, Elmarie. Listen, I agree 100% with what Willem and Alistair have said in that the story or your motivation for the funding must obviously relate 100% to your cash flows. And I think a big thing there that it must be motivatable, So if you say, Megan, I'm coming to you for R1 million funding, with this R1 million funding, it's going to generate another 150,000 Rand turnover for my business. How? Why? You need to be able to explain that to me, and I need to see it and understand that motivation for me to actually really be able to believe it. You know, you can't just tell me that. I need to understand why. So I think that's very important, is to have the business plan, to have the numbers, but to have a very valid motivation for the two. I think in addition to that, just in terms of the numbers, you know, I think us as funders, a lot of emphasis is placed on various financial ratios as well. And I do think that there's very specific ratios that clients must be aware of. So I think probably more so than anything else is your debt to equity ratio in the business. So you need to understand what your gearing levels are. And that essentially means how much cash or how much equity is in your business versus how much debt. You know, because quite often we do get businesses that come in and they're already looking so over indebted that to put more funding into that business doesn't necessarily make sense. So then we start looking at, does this business have the ability to afford its money obligations? You know, so we place a lot of emphasis on solvency, debt to equity. We look very much at your liquidity ratios as well, you know, so that's ultimately your current assets again versus your current liabilities. And then again, looking at your debtors and creditors payment terms, you know, how quickly do you need to pay your suppliers versus how quickly do you get your cash in, you know, so that forms a very, very important part of our funding decision at the end of the day. Does it make sense? Can the business cash flow actually sustain what we're trying to do? And then that ultimately comes down to the entire risk argument for the investment and the viability argument. Is this business viable? And I know from a business partner's perspective, we ultimately assess our businesses on 3 levels of risk, which I think everybody has sort of touched on already. Number 1, our entrepreneur, your history, your background, your experience. Have you built up a bit of a balance sheet, your financial acumen? Number 2, our business. Is there a profit history? Is it a startup? Is it a mature business? And again, the profit potential going forward, and what is the purpose of the funds, and does it make sense? Is it viable? And then lastly, obviously, our financial risk and how much money are we ultimately extending. And then at the end of the day, let's be honest, depending on the funder that you're working with, there are collateral requirements, you know. So if I'm going to give you R1 million, is that R1 million going to be secured? Is it not going to be secured? If it's going to be secured, what kind of collateral are you giving me? Is it movable assets? Is it immovable assets? Because obviously immovable property, you'll understand a house has a much higher security value versus desks and chairs or kitchen equipment, whatever it may be. And based on all of those risk elements, I think a funder is ultimately able to gauge what the risk is in that transaction and what would be a fair return for that investor, for that risk taken on. And that is ultimately how we establish the viability of a transaction, and if it actually makes sense and if it is affordable.
Okay, thank you so much. So we have just 5 minutes left. In closing, I'm going to ask each of you, I know that Alistair and Melody, you've raised your hand, so you can raise your points when we get to you. But also, you know, what is the one thing that you would say to a business they can change today, you know, to help them, that they are, when they need the funds, that they have a bigger chance of success? So let's start. I'm just going to go with, as I see you on the screen, Alistair, we'll start with you. 1 minute.
Yeah, so I think going back to what I've said before, develop that skill set. I think there is a curve that crosses over somewhere in the life cycle of the business journey itself. When you start out a business, you tend to work in the business. As your business grows and starts to scale, and as you start to look and engage with funders, you are needing to start moving out and working more on the business, because a lot of what the funders are going to expect is that ability to grow and manage and scale the business for them to be able to get a return. That requires a business owner skill set rather than just somebody doing a job. And if there's a very good book I can recommend for people to go and read, it's a book by Michael Gerber called E-Myth. and he talks about the technician, the manager, and the entrepreneur. Very insightful. It talks about business process standardization. Read books as well. Very, very important as well. So that's my parting thoughts.
Thanks, Alistair. Melody, over to you.
Yeah, I want to just add that, there's all the technical things, right, that you require, whether it's, the success of getting funding or the success of your business. There's also the soft skills that we should not, underestimate, at all. Your believability as an entrepreneur actually plays a big role in, whether people invest in you or not. There's a saying that says, people invest in people. You might find that there are certain boxes you might not be ticking when it comes to the technical requirements, but your believability as an entrepreneur holds a lot of weight. And you'll see this if you watch shows like your Dragon's Den and Shark Tank, that there's that entrepreneur that gets there and they've got a very strong value proposition. They are solving a very real problem, and they are very believable as an entrepreneur. And they might not have certain things when it comes to the big list, and they get the funding, and you wonder, how did that happen for them? So I just want to raise that point as well to say it's just very important that you are a well-rounded entrepreneur, and this is part of your skill set, your ability to sell, knowing your value proposition very well, and just being that type of person that when you walk into the room, people want to invest in you. Before you even say, this is what I'm selling, they're already intrigued and they want to know, what is she selling? Because I want to buy it. It plays a very big role.
Thank you very much, Melody. Willem, 1 minute from you. Last thoughts.
Thank you. I'm sure everybody in the room and who's watching will agree that being in business is nearly like being slapped in the face every day, and then you have to still get up and go and do it. And so my advice, if I can call it that, would be to always be passionate and believe in what you do. Be the biggest fan of your business. And even when you don't feel like it, just pitch up. Even if you're going to make one small change for the day, just make sure you pitch up every single day. That's going to stand you in good stead for the long term. Thank you.
Thanks. Thank you very much. Yeah, just show up every day. Megan, last thoughts from you.
Thank you, Elmarie. Yeah, I echo everything that the colleagues have said this morning. And I think maybe from my side as an actual funder, make sure you have all of your information up to date. I don't think I can emphasize that enough. Make sure your financial statements are completed, your management accounts are up to date. Make sure your tax returns are complete and everything is up to date. That is the information that we are looking for as funders. So if anything, make sure that all of your information and all of your compliance is ready and it is up to date for submission to any funder. And I think lastly, don't be afraid to ask for support. I think all small business, they need assistance. We need support. We need to be open enough to admit that sometimes and to go out there and ask for it. I know that many funding houses are out there offering support, and I think it would be so beneficial if everybody actually takes hands and looks to that support for assistance. Thank you.
Thank you. Thank you so much, everybody. It is 11 o'clock. Our hour is up. I really want to thank my panel for the valuable information that you've shared. Thank you so much for also making it accessible and easy to understand. I think a lot of times as small businesses, we can feel really intimidated when people start asking us questions about our finances. And because we run businesses, we're not accountants. So I want to thank you very much. And thank you to everybody that's joined us. Have a blessed day. And thank you very much.